take them, we process them in a transformation or a conversion process. And from that process, we get an output. And an output is defined in terms of 4 elements. What did we say an output is? An output is the total quantity of good quality goods and/or services that have been produced within a predefined or predetermined time at a predetermined cost. Right. So we said these are 4 important aspects of an output: quantity, quality, time, and cost. This system that we call a business, we said it works within an environment, and this environment in a little layer, same area here. The internal layer, which we call internal environment or micro environment, which is the 4 P's again. What are the 4 P's? Product, place, price, and promotion. The second layer, which is the task or the meso level or meso environment, is made up of 5 elements. That's customer, suppliers, employees, competitors, and intermediaries. And then we've got the bigger environment, which is the external environment or macro environment. And we said there are different elements, but there are 4 more important ones. That is pest. Pest is political, economic, social, and technological. Then we moved on. We said this business of ours, when we take these 4 ends and we transform them in the process to make the output, we are intending to satisfy the needs of the 5th M. And the 5th M is the market. So we said the market is a person or a group of people or a business or a group of businesses or all of them that have needs for your product or service. They have the means to pay for or to buy those products or services and are willing to buy from us or from you. Then, that is the 5th M. Then we spoke about the 6th M, and we said the 6th M is management. And management is about measurement. If you can measure it, you can manage it. So the functions of management is planning, organizing, controlling, and leading. And we also looked at what a plan is. We said a plan is a written document of 5 women in a house. And the 5 women are what, why, who, when, where, and how. We still together again. Then we moved on. We said management has to measure, and other elements that this management has to measure are absenteeism, wastage, efficiency, utilization, and labor turnover. Then we moved on to say there's a difference between production and productivity. Productivity is measured by dividing output by input. So P equal to O divided by I. And what does productivity tell us? Productivity tells us how much output is derived per unit of input used. Then we got into financial management or accounting, where we said our emphasis in accounting is ensuring generally acceptable accounting said capital is a liability because the business will always owe the owners of that business that money that they started the business with. And that is why it falls on the liability side, right? And when we talk about assets and liabilities, we know that we have current assets and non-current assets. We have current liabilities and non-current liabilities. Current assets are those liquid assets, the assets that can be converted into cash within a period of 12 months. Current liabilities are those liabilities that must be paid or that must be honored within a period of 12 months. And non-current assets are those assets that we use as a business in order to generate money. In other words, they are the assets that we do not necessarily want to convert into cash. And non-current liabilities are those long-term liabilities, the liabilities that a business has to pay or honor over a period of more than 12 months. Does it make sense? Then we spoke about the double entry system. In fact, we looked at the accounting cycle. We remember those 6 steps? What are the steps? Step number 1, transaction takes place. Step number 2, a source document completed. Number 3, entries are made. Number 4, to the ledger, right? And we remember what a ledger is, right? The ledger is where we do the double entry system, right? And then the next step, ledger balances are transferred to the trial balance. And we remember the trial balance. We were doing our daily balances and big balances. I gave you two examples of trial balances, right? Okay, and the last step, final balances are created and closed out. And then we started working on our income statement. Our income statement, we remember we said at the top it starts with income. Income can be called income or can be called sales or can be called revenue or can be called turnover. It's always the top item in our income statement. From the income, we subtract cost of sales. And how do we calculate cost of sales? Opening stock, we add purchases, we subtract closing stock, right? And then we take our cost of sales, we subtract it from the income, we are left with gross profit. Then from gross profit, we subtract expenses and then we get net profit before tax. Then we subtract our tax and we are left with net profit after tax. So that's where we ended yesterday. And we were busy with the income tax